Hi, my name is Vinnie Racile. I am an instructor for Accounting 1040. This is a tutorial on 13-5. Let's get started. So I'm just going to move over the problem or the solution, and we're going to work on reading the problem first, and then we will work on the steps for the solution here. So Shahidi Corporation engaged in the following share transactions in the first quarter of their fiscal year. They've got a series of transactions that occurred. Let's review them. January 19th, they issued 4,500 common shares for cash at $11 per share. February 3rd, they sold 1,000 shares. They're $1.50 Class A preferred shares for $15,000 cash to new investors. We'll explore further or dive in further into the meaning and the breakdown of this in a few minutes. February 11th, received inventory valued at $20,000 and vehicles with a market value of $17,000 for 5,800 common shares. March 15th, we issued 3,000 $1 Class B preferred shares for $14 per share. They want us to journalize the transactions and figure out what the contributed capital that was generated for Shahidi Corporation for the issuance of these shares. So let's take a look. We've got some key facts here. We've got common shares. I'm going to actually break this down and jot this down for us. We've got common shares, 4,500 for $11 each, right? We've got preferred shares, and the preferred shares for 15,000 cash, 1,000 shares. They have not given you, you need to calculate cost per share. You may not if it gives it to you in the product. We'll just basically look at what the information is that's missing. You've got inventory, vehicles, 4 shares, and they've got Class B shares. The Class B are 3,000 shares for 14 each. So we've got the key information jotted down here, and what was the purpose of that? That is to help us understand what we need to pull out of the problem so we're not rereading it over and over and over as we try to resolve it or solve the problem. So let's take a look at the first transaction. Issued is a key word for we gave shares in exchange for something. What is the something? The something is cash. So they said if they issued common shares for cash, it's telling you what the exchange is at $11 per share. So they issued 4,500 times 11, which is 49,500. They deposited the cash, which is what they traded them for, and they issued common shares, which is a credit. So the debit is cash because you're depositing money. February the 3rd, they sold 1,000 of these shares at there are 1,000 of these Class A preferred shares for $15,000 of cash. They're using different words here, but essentially it's the same thing. So if they've sold them, they basically said, we're going to basically charge them $15,000 and take a deposit of $15,000, and we're going to issue these Class A preferred shares. Now, I put you needed to calculate the cost per share. In this problem, you don't, but I made sure I identified that I didn't have the cost per share so that I knew what to do. So in this case, they gave me $15,000 cash, which is the amount and the value of the shares. To calculate the cost of the share, if I needed to, I would take the $15,000 and divided it by the number of shares issued to get the cost per share, which would be $15, not $1.50. The $1.50 denotes the dividend that is required in exchange for selling these shares. February the 11th, they exchanged inventory and vehicles rather than cash for common shares. So they give you the values of 20,000 and 17. So you're acquiring these assets, which is a debit, and you're issuing shares in exchange. These are given numbers. This is a sum to offset them to balance the entry. March 15th, they issued 3,000 shares that are Class B at $14 per share. So it's 3,000 times $14. Really straightforward transaction. Same idea here. So just make sure that you understand the value per share versus the dividend value. So when you have preferred shares, when they say $1.50 Class A, that's speaking to the par value of the share and not speaking to the market value of the share. Let's take a look at the second requirement here. Just going to open this up so we can take a look. Oops, other way. So contributed capital. The problem is asking us to basically figure out the contributed capital for Shahidi Corporation. What does that mean? That is the net value of the shares issued for cash and other assets. So we've issued a whole bunch of shares, which brings a value to our contributed capital because we've collected cash in exchange for this ownership, or other assets in this case, cash and other assets. The first step in the three-step process here is to basically denote the preferred shares. You want to list those shares first to ensure that they are identified. So think of the Class A or Class A and Class B and preferred and common is kind of like an airplane. So Class A are people the first in line to get on the plane. They sit in first class. Class B are usually like business class people. They sit kind of second, still roomier. The common shares are kind of for all the common people, which is basically the entire rest of the plane. So try to think of it maybe in a term like that to help you remember. You want to ensure that you're using this format to make sure that you outline your contributed capital in the same format each and every time. So in this case, preferred shares, you're going to put Class A first. You've issued 1,000 shares. How do you know that? Because it told you right in the problem. The $15,000 value was basically calculated up here over in the journal entry. Same with the Class B. They gave you 3,000 shares. You know how many you issued. You just did the journal entry for it. The second is the common shares. So common shares, we've got the 49,500 plus the 37,000. So where did we get those numbers? The 49,500 is up here. The 37,000 is over here in your entry. And we basically have just summed them together. Fairly straightforward. Oh, in terms of the common shares, how did we calculate the number of shares? If you recall correctly, they gave us the $11 value per share for common. And so what we did is we just divided the dollar value by the number of shares there. Okay? Really, really straightforward. The last piece of this is actually just to sum it all up to make sure that you have the sum of all the contributed capital. Contributed capital is essentially just the net value of all the capital that you basically acquired, all the money and or assets you've acquired and the value of it in exchange for ownership. Hopefully this is fairly straightforward and you can continue on with the next problem.